Hey there, this is David Cox, Senior Portfolio Manager at Financially in Sync at Raymond James in Waterloo, Ontario, Canada. Today on the webinar, Where Do We Investors Stand? It is Friday, April the 24th, 2026. Let's get started. We'll start off by week, as we always do. You can see commodities up at the top of the list there, again, being really largely driven by broad complex of things. Gold certainly not going up anymore. We're going to talk about that a little bit more. Small caps outperforming, and for the most part here, other than you can see gold and silver on the bottom here, markets have come back a long way. They bounced the new highs in terms of main stock markets and certainly in the US, and we will get into all that and more. On the left side, this is the S&P 500 daily. You can see here again, we talked about that bottom that was happening in the face of all those ingredients of the market behavior starting to appear better, of course, before the headlines change. On the right side, you can see the Toronto stock market. We've actually got a lower high here. And again, I've drawn a trend line. Why do I get to do that? Well, again, there's some selling pressure that happened earlier this week. And that to me looks like it's worthy to draw a lower high on there. So that's a market that did not make highs. I think that could be interesting. Again, remember, Toronto market has a lot of materials, a lot of these gold and precious metal stocks and whatnot that have weighed on it a little bit in the short term. Let's look at Bitcoin. Bitcoin has been doing very well since the Iran kind of war here started, and but at the same time, it's came down a long way, as you know. I just want to show the MACD. So this is essentially just a way of looking at a couple of sets of moving averages, essentially. And so again, this is not some black box system. You don't just kind of buy every time there's a green circle and sell every time there's a red circle. At the same time, I would always encourage us to all realize that assets go up and down, and they go up and down over various time frames. And when the MACD, for example, turns up, what we've got is moving averages starting to converge and move higher. And I like that. And certainly when things happen from a low level or they turn down from a high level, I think that's very, very important. You can see we have turned up from a low level, in fact, a lower level than we were at in even 2022. All that being said is that the demand has started to overwhelm supply and prices have come off of the bottom. If we look at gold using the same parameters, you can see here a little bit different chart here because essentially gold has turned down. Okay, this is a weekly chart actually. Gold has turned down from a very high level after a pretty strong rally over the course of the last couple of years. And you can see there's a lot of force. And so again, from a volume standpoint, there's been a lot of selling pressure. And to me, the longer something goes on, I think that's more important as well, right? You've got time takes place in the context of a trend, so price can rise and it can rise over whatever time frame we're looking at. But the bottom line is that if MACD, let's say, rolls over, you can see just really sideways activity is all that took place. But does this look different than it did in the last few years? It does actually. Let's be honest, right? So not only is MACD rolling from a high level, but we've certainly got that force, and now essentially we've gone and printed, essentially a lower high and a lower low, which to me is the definition of a downtrend. So look at the biggest stocks in the US. There's Broadcom and Taiwan Semi just absolutely driving these the markets higher. The semiconductors are just seemingly unstoppable with all this, of course, going on with AI and everything else, right? Autonomous everything. You can see Walmart is right up there. On the bottom, we've got Microsoft and Tesla down, driving the index lower. From that perspective, you can see the index is right in the middle here. This is the last 3 months we're looking at. Going to do the same thing here in Toronto. You can see there's Canadian Natural Resources, the CIBC, TD Bank, all above. But you can also see here that in the last 3 months, we've gone and we've swung here again. So the S&P 500 has been outperforming Toronto over the course of the shorter term here. And I think that's, again, perhaps important because remember, Toronto has been a large, long-term underperformer. Things can go back and forth, but again, we've got a really significant difference in sector composition that we must remember. Let's look at some of those semiconductors, and these semiconductors just continue to be beasts. These are three, positions that our clients certainly understand. We've all looked at them before in this webinar every week, but again, Taiwan Semi, you can see is the only one that's made highs so far. Is Broadcom in the middle, and this is a Japanese semi called Advantest. And so again, Broadcom had come back above that 200-day moving average, which is not shown, but I showed it a couple weeks ago. And again, wow, it's just gone straight upwards, like the market has. Let's also talk about uranium. This is certainly a theme that has been a focus industry group, if you will, right? So energy, I would call a focus group. And from that perspective, inside of energy, the broader complex, what we've got is uranium stocks. And so Cameco is the big producer, dual listed, but a Canadian company on the left. There's Energy Fuels, just another company here on the right. You can see again, we've got higher highs, higher lows everywhere. And then we've got the Sprott uranium miners, which again, it just includes not only uranium prices, but of course the two names that we've already mentioned. Now I want to show you the DC ATR. That is, again, that's just the ATR measure that I use to estimate expected volatility of a given stock. You can see that Energy Fuels, essentially what that's saying is that, on a given day, we can expect an 8% up or down move, and that's pretty significant. So we certainly want to understand volatility in our portfolios, as we have discussed. We want to understand what is normal and what is abnormal when we look at price activity. So all this is really trying to say is that, energy fuels is a much more volatile stock than Cameco, and the ETF is lower than Cameco. That makes sense, right? An ETF is more diverse, it holds more broader exposure, and that should kind of make sense from a common sense standpoint. I think one of the most entertaining things this week was Avis Budget. I've certainly rented a car from Budget. Some of you, I'm sure, have too. This stock, I mean, essentially earlier this year, bottomed and just absolutely took off 888% to the highs earlier this week. I mean, that is absolutely tremendous. 85, 90 bucks, whatever it was, surged up to $850. You got all kinds of short covering and all kinds of nonsense going on. The point is, this looks like a moonshot. And the craziest thing is there was a huge call option position bought on, I believe it was Tuesday. Somebody put $16.5 million into a 2-week call option at 850, and essentially one day later, as that biggest bar against happened, which again, I like to call that the peak, essentially that investor would have lost $13 million. And it's just unbelievable the magnitudes and the speed with which stocks can move. Certainly these kind of almost meme stock kind of situations. So in the last 2 days from the high, this stock has fallen 75.5% to the low. Where does it go from here? Who knows? But again, the bottom line is, wow, stock markets, we must accept that there is risk. We must understand the volatility of our positions, and we must continue to act accordingly. We'll finish off with sector watch. You can see the staples bouncing a little bit this week, but they've been relatively weak, and they've been an absolutely weak. Gold miners down on the bottom again, just continuing to sort of see selling pressure ever since the highs in gold and silver earlier this year. I'm on CNBC Arabia next week. I'll be, I believe that's Wednesday morning at 9:30, and then I guess the week after or so, I'm on the been invited to be a guest on the CMT Association podcast, Fill the Gap, with fellow CMT charter holders David Lundgren and Tyler Wood. Very much look forward to that. Please follow me on X. I'm at David Cox RJ, and thanks again for your time this week. This has been David Cox, portfolio manager at Financially in Sync in Waterloo, Canada.